All right, are we recording? I think so. I think we're on. G'day, mate. How are ya? How's your mum? Welcome to QuantBox Live. It's 6:30 in the morning, 6:34 a.m., about 3 hours before the open of Wall Street trading. It's time to get your global macro on, where we uncover the best fundamental investment opportunities across global markets and asset classes. S&P 500, gold, oil, currencies. How about some crypto? Yeah, I got you, dog. So, anyways, my name is Wayne McDonald. I'm a Harvard educated macroeconomist. Just a bachelor's degree, though. No big deal. Just a bachelor's degree. My master's degree is in financial management. Similar, only different. Very cool. But above and beyond all of that, I'm an investor and I'm a trader. And so I'm using macroeconomics to try to figure out the flow of capital around the world and then use technical analysis to confirm, enter, and exit trades. Very cool. So, what QuantBox does is it looks at various things like seasonality, like technical analysis, like GDP, like inflation, like employment, so on and so forth, compares and contrasts them between different economies, so like Canada versus Switzerland, and then organizes it in great bullish and bearish opportunities, but just based on quantitative analysis. But then we've have some new upgrades to QuantBox that occurred very recently, which not only just does quantitative analysis of macroeconomics, but it also looks at very short-term sentiment. So, for example, it makes decisions on what the VIX is doing right now. What is gold doing right now? What is the Japanese yen doing right now? What's the dollar doing right now? What are treasury yields doing right now? It combines that market forces with economic trends. Like, oh my gosh. So you can get a scenario like this. Very cool. Look at all the colors. Super important. So, anywho, welcome to QuantBox. If you're watching this on YouTube, you're watching a delayed video. Hey, that's cool. It's cool as long as you got the information. But I do want you to swing on by, take a demo, a trial. Really, it's a trial for a week. It's only $8. And inside that, you get 2 different training courses, about, I don't know, I'd guess 20 hours of training videos with for your $8. So, anyways, swing on by. You might just have the confidence to let your winners run. That's the whole point. I don't want to improve your trading. I want to radically change the way you trade. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Looks like I got to log in. I had a little power outage yesterday, and I guess we should talk about it now. See Adelia? By the way, I was standing in exactly that spot in Cuba like a week ago. Yeah. Vidales, Cuba. You know, Del Rio. Yeah. Anyways, and there's Havana. So, anyways, holy smokes, there's a hurricane there now. And I've taught you in the past, if you've been a member of Investor Bootcamp, that when hurricanes come in low and shallow, so Jamaica, Cuba kind of area, it runs into the mountains of Honduras and Mexico, okay, pushes the hurricane up into the ocean. And this is where all the oil is. So by the time you start to hear about the worst hurricane, you know some guy's going to be on CNN saying, this is the worst hurricane ever seen by any, yeah, it's always the worst. So anyways, it's the worst one right now, and it's going in here. So if I were me, I would own oil, because the idea is it comes in, knocks out a bunch of oil rigs, and there are thousands. And then even on shore, there's a lot of drilling in Texas, Louisiana, so on and so forth. And so if it takes the oil industry out, even for a few days, that's a threat to supply, less supply, price goes up. You know what I'm talking about? I have funny pictures of me doing this like 20 years ago. So it's nothing new. And the funny thing is, this website hasn't been updated in 20 years. Thank you, government. Yeah, you're like, it looks like a cartoon. Uh huh. Anyways, lots of really interesting things, by the way, when you look at this site. They have some pretty cool things. So that's going in for the new fees. Okay. But, anyways, so let's log in. So yeah, I lost power last night, right in the middle of a session. Probably weather due to that hurricane. Yep. So anywho, let's go on. Just want to check on this. Yeah, so we got Monday's recording. So it must be Tuesday today, huh? Is it Tuesday? Super Tuesday? Also, anyone having tacos tonight? Yeah. Yeah, we don't have Taco Tuesday where I come from. We have Tostada Tuesday. Way better, I'm telling you. Yeah, way better. Whereas they say in Canada, tostada. Ba, 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 ba. So once again, I yelled at the developers. We're working on gold. Apologize for that. There's just somewhere like on on tradeplans.ai, I'm using a different service provider for gold because I'm adding gold. Shh. I'm adding gold. Um, but guess what? I can only get 20 years worth of gold data with 1 minute candles. 1 minute candles. So now we then have to do the mathematics of calculating what an hour is. But you're like, well, that's easy. Just multiply it by 60. Well, what was the highest high? What was the highest low? What was the open price? What was the close price? What about weekends? What about holidays? And you're like, dude, that's a rat's nest of problems. Yeah, I call that money. Yeah. So, anyways, so gold maybe this other service provider is having problems and they're sending nasty grams to people. But look, this is a complicated thing. So, anyways, we're having trouble with gold. We have been for a couple of weeks. Hopefully, it's updated. But 10-year T note, hey, look, yields are high, but somebody's been buying it. Wasn't it like 4.3 last week? How do you get yields down from 4.3? Wishing? No, you have to buy it. Interesting. So, anyways, some yields are coming down. Kind of interesting. That probably favors a lot of people. But anyway, somebody's locking in 4.3. Remember, this 10-year T note hit 4.3, but the 2-year hit 5.0. 5.0 is the psych level. You just don't see it here, but it affects everything. Oil trying to head up to what? Are we going to hit 81 today? Well, if we start worrying about the hurricane, yeah, we're on our way to 86. But anyways, we've been sitting around farting around 80 for a while. Remember, I bought it out at 79 and it flip-flopped all over the place on Friday, just enough to knock me out, and then went back above 80. But we've been at 80 now for a day. A day. So it's flat but up. S&P 500 up, trying to get back to 44, 44. Remember that was a bottom at one point? Now it's going to be a top. We'll see. Euro dollar, okay, flattish, Bitcoin flattish. Now remember, I'm trying to be a bull. I'm prepared to be a bull. I'm RWA, ready, willing, and able to be a bull. So I want yields down. I want oil up. I want gold up. I want S&P 500 up. I want euro dollar up. I want Bitcoin up. We're not there yet. Slow as molasses on a cold Georgia morning, but at the same time, it's not down. Take some time. We have lots of news this week. I guess why don't we just pop over there. Boop, 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 boop. Okay. Is this right? Retail sales in Europe is down, is a negative number. I always find that funny, right? Like, how much groceries did you eat? Negative. Negative groceries is. How do you lose weight? You sell you sell food, but you don't eat it. I don't know. So, anyways, obviously less food, 3% less than last year, but ouch. Not the good is the translation. Okay. So we got housing data. This is is it important? Yes and no. It's sort of some more empirical evidence, but we know housing's probably stuck. Um, if you own a home, you can't sell it because you have to live somewhere. So if you sell your house, you have to move somewhere and get an 8% mortgage. Well, that doesn't sound cool if you have a 3% mortgage, so you ain't going to sell it. But if you had to sell it, you'd have to sell it for less than you bought it because someone else couldn't afford buying your house at the high interest rates or qualify for a loan that expensive. So you'd have to lower your price. But you're like, I don't want to lower my price. I made it all the way through 2008. I ain't going to sell it now. So, boom. So that ain't going to work. But what we'll probably see is new houses will sell, and so you can separate new houses, existing homes versus new homes. In this case, we could look at sort of aggregate prices. So the case Schiller, Schiller being a Yale man, but he won a Nobel Prize. Um, we want to see our housing prices coming up or coming down. Coming down would be disinflationary. Remember, if you are going to sell your house, you're going to sell it for less. So down is likely and logical. And well, year over year, yeah, we're expecting that. So we get all of that. Jolts, though, Jolts is probably, I don't think it's going to be a big deal. Like it's listed here as a big deal. I mean, I mean, relative to before, like there was a time when nobody cared about Jolts. And now we're looking at it like, oh, well, there used to be 10.58 million jobs, but now there's only 9.58, but now there's 9.46. That's so much better. Like, dude, like seriously, right? I mean, does it matter? There's just a lot of jobs available. Yes, and it is declining. So that's actually somewhat good, right? Oh, sorry, Jim, email me again, like right now, and I'll do it in between. Right, Jim can't get access. So yeah, email me again, and I'll do it between sessions. So anyway, so Jolts, yeah, okay, good. We want the gap between workers and jobs available to narrow, and the narrowing, I suppose, is a sign that the employment market is cooling off and the economy is slowing down, and therefore consumption would fall, therefore inflation would fall. Yeah, but bro, there's still like 9.5 million jobs. So do you care if it's 9.5 or 9.6 versus 9.5? In general, it's still a lot of jobs, right? So anyways, API comes out today, expecting a drawdown that would push oil prices up. With a hurricane coming, that would push prices up, and then so on and so forth. Okay. So on and so forth. So it's an okay day today. Tomorrow's a bigger day with ADP. Thursday's a much bigger day with PCE. So anyway, so this is sort of the first part, and Jolts is the biggest part. I don't know, maybe some consumer confidence is that waning. Oh, it was 117, now it's 116. That's so much better. But remember, I'm looking for a catalyst to put us from the summer fade into summer buying. Okay, that's what I'm looking for. I planned it out 36 weeks ago. Was ready, willing, and able last week to start implementing. And now I need the first catalyst to make the trades work. All right, so why don't we start with the oil trade and see, because we have API, which Tuesdays are the best trading day, if you remember. But also the hurricane risk to supply is coming, right? And so there's the my WTI. Here's yesterday's trade. Oh, I got to get my drawing tool. I lost it because of the storm last night. Epic. Boo, 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 boo. Boo, ba, da, ba, da, ba, ba, ba. All right, here we are. All right, so okay, remember all of this started with the assumption last week that last week would form a bottom. Okay, I traded a breakout last week right in here. Oh, excuse me, man. And then I got knocked out on this spike down. I was knocked out for less than an hour, and it went right back to where we were. But anyway, so this is like me trying to get back in. I might have even tried one other time, but nonetheless, what is this? We have a higher high. So I'm a bull, so I want a higher low. Okay. So you look at old levels of support and resistance. And so I'm like, well, what about this level? What about that level? And then these pivots were almost formed at that time yesterday. Like they were still floating pivots, but nearly formed because it was later in the day. And so my trade plan was buy the dip. So I ended up buying it here. I couldn't get any smarter than that. Pretty boring kind of an entry. And now we got this. Oh, thank you, Jim. Yeah. Any thoughts about that? Again, fundamentally, I'm risk on based on seasonality. Fundamentally, I think oil could move to $100 a barrel. I said that when we were at 65. Fundamentally, there's a hurricane in the pipeline that's going to hit the Gulf of Mexico. And then fundamentally, a API data comes out today. And my historic analysis of the week is Tuesday's the best day to trade oil. So I bought it yesterday on a dip at a roll reversal in a daily buying zone off the I think it was a 4 hour something too, but in this case, off of a 1 hour moving average. And it looks like the London boys bought the dip. Cool. So can we make a higher high? Well, my target is 81.25 to really almost 82, not quite 82 on the short run. But remember, my actual target is probably closer to 100. We'll see. So we'll see. I hope the hurricane dies and everyone is safe around the world. But just in case, I'm basically hedged. Boop, 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 boop. Okay, I guess we'll have to do the stock market next. Okay, once again, 36 weeks ago, the assumption was to be ready, willing, and able in the third week of August. This is the third week of August. Going into the third week of August, we test the projected low for the month. Actually, if I redo this, it'll be perfect. So let me do it this way. So this gray zone is the projected low for the S&P 500 for the month of August. On the first day of the third week, we hit that and created a bottom. Then on the last day of that week, we double bottomed. So I'm long. Mm, 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 mm. Cool. Cool. So now what? Well, now I'm hoping to survive, right? So now we're above the moving averages. Remember a couple of days ago when we saw this for the, after my entry, I'm like, look, I got to get above these moving averages. I get it. Um, but I took an educated guess that we were going to break above, right? So how did I do that? I dropped into the 1 hour instead of the 4 hour. So, anyways, now we're using these moving averages as support, and hopefully the next couple of days goes this way. Okay, and I basically can't lose money. But you're like, but Wayne, that's 4 points. Okay, how about look? I cut my risk in half. There we go. Yeah. So, anyways, I don't know. Praying never hurts. What about this gold? Just a slight higher high today, so I gotta update if I can. I gotta update some of these trends. Boop-a-doop-a-doo. Okay. Now that's complicated because I have to keep updating it. Okay. I just want to show you like this is what I'm thinking. So now if I get rid of these, and because I don't want to keep updating them, I have a tool called price action pivot points that look, I can use this to do short-term stuff, but I can do another one, instant price action pivot points, and then I can do 21. Okay, there we go. And the 21 is what I was drawing before. Remember, just manually. I had to use two different studies. Well, now this updates itself candle for candle for candle. So you can see it's somewhat bullish in a quite bullish market. Okay. So hopefully we keep riding these moving averages for gold and gold continues to keep up. I'm long just below 1900, and so we're up 20 something bucks, but I'm hoping we go all the way back to 2000, maybe beyond. So, what does this look like? Okay. Well, kind of looks like it could be. I don't know yet. I don't know yet on this time frame. I don't know yet. It's still very bearish using moving averages, but I'm hoping that it works out this way and I trade the double bottom. And of course, a target would be like this distance here. So let's just measure that. Boop a doop a doop beep beep beep. Let's measure that for my entry. And I'll put it there. And yeah, we should get to 2000. Okay, 2050, 2020, and beyond. Yeah, so we'll see. I don't know. That's still a long shot, huh? Still a long shot. If I look at the indices, yen's still weak, dollar's still strong. Too early for the dollar. Remember, using QuantBox, we're thinking dollar weakness might show up. You're like, Wayne, well, how do you know that? Well, you can, first of all, you should be going through all your currency pairs. You should be looking at risk gauges. Okay. But I also, to make life easy, you're welcome, by the way, I put somewhere. Is it this one? No. Well, first of all, you can go through all these one after another. Oh, this one is what I'm looking for. Dollar. We're looking for up on the Kiwi dollar. We're looking right for up on the Aussie dollar. We're looking for up on the Euro dollar. We're looking on pound up for the pound dollar. Look, these are the 20-year averages. Boom. So why would I think that around September, October, Euro dollar might go up. Well, because over the last 5 years and over the last 20 years, it usually does. Okay. So, anyways, that's just one beauty. She's a beaut. Okay. One tiny beautiful thing about QuantBox. It helps you predict the future. Okay. And now we've gone from risk off to risk off, to risk off, neutral, to now risk off, neutral, neutral. But even look at this, just 1 point, but still one tick to the risk on. It's not really risk on yet, but remember, it was like -3 yesterday or something. Something's changing on the medium term. Okay. Well, S&P 500 stopped falling over the last 7 days. Gold is up 3% over the last 7 days. VIX is down 13%. You see, all of a sudden you're like, dang, things are turning bullish. Yeah, that's why I started setting up the trades last week. So I don't know if the news comes out my way, and it might not, but if the news comes out my way, it's going to work out really nice. If the news doesn't come out this week favorable for my bias, I'll just have to try again at the end, closer to the end of September, probably around the Fed meeting. That's all. I'm not going to ignore the 20-year trend, am I? So I have 2 shots. Third week of August, third week of September. I got to stay true to, right? To my internal compass, my true north. I have to stay true to my true north. Yeah. Yeah. So anywho, but still on the long run, still very risk off. Okay. Boo, 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 boo. And just so you know, like somebody asked me the other day, like, well, how do I know what to do when there's risk on and risk off? You should be bullish these assets and bearish these assets. You know what I'm talking about? It actually says it. That's what you do. If you're bearish, you would buy dollars, sell Aussie. Okay. But I think all of this is changing from the bottom up. I'm doing bottom up analysis these days. Do a quick look at the scatter plot. Boop, doop, doop, boop, boop. Okay. Stock market up. Stock market up. In fact, let's just do the indices. Okay. I'm a buyer of the stock market, and the Japanese stock market's up. The German stock market is up. Both, I think this is Dow and S&P 500 are up. NASDAQ is up, and the FTSE's up. Yay! Sounds like crank anchors, doesn't it? Anyways, yeah, cool. All the stock markets are up. That's what I wanted. Cool. Anything else? Bitcoin is slightly up. I wouldn't make a big deal out of that. Oil is up. So I guess we'll do commodities only. So I'm long. I'm a buyer of gold and I'm a buyer of oil. Sweet. Those are working out. Gold just barely, but not down is the first up. In a risk on world, you'd think Bitcoin would be up. Oops. And it's flat. All right. Well, not down. Major pairs. Or sorry, those are minors. Clicked the wrong one. Well, I guess we could look at it. Swiss yen up, Euro yen up, CAD yen up, but all just basically zero. Swissy though, look at us, Swissy tanking. Very interesting. That might be it. Remember how strong Swissy has been? But in a risk-on environment, Swissy is weak. It's been very strong. So I just showed you those biases, remember? And it said in for risk off, you would sell Swissy, sell yen, sell dollar. And so all of a sudden, all the Swissy is weak. I don't know. Does it mean my risk on point of view is correct? I don't actually know, but it fits. But I don't want to grab at straws to prove I'm right. I want to make sure I'm not wrong. Okay, and dollar mixed. Okay, go back to the charts quickly, and then I'll let you go with your day. I'll let you do it. Too early for me to sell USD, but maybe I start on the Swissy. See, maybe this Swissy move here. But we'll go to my yen pairs. And I'm trying to hang on. Trying to hang on. Okay. There's euro yen. It had a nice little pullback. The London boys bought it. I'm long 157 and a half. We're above 158 and a half. So just slightly 100 pips, 120 pips maybe. And so hopefully for the day, we make a higher high and higher low. So over the next 24 to 48 hours, what I'm looking for is something like this. And at this point, I can move my stop if I wanted to. So I can move my stop from here, oops, to here. That's one way to handle it. Well, that's a swing low. Or I can use my PSAR. Wonder what it is on a 15. Just quickly look. Yeah, PSRC takes you out. That's too much. And then PSAR would have taken that out too. So yeah, so clearly PSAR on the 1 hour is the right one if you're going to let her run. So anywho, there's your euro. What else is going on? Beast. Okay. Not looking pretty, huh? There's the hour. Let me zoom in. My trade plan for the day, my day trade, okay, is this idea of up, down. So I bought it on the moving averages, pivot point. You see, there's the entry. See? Okay, we already hit target, so I could have taken my profit and ran. So 185. My entry was 184 and a half, so it's only 50 pips. So now the plan is right, it comes down. So hit target early, fades before the London Open. London boys are buying it back. And hopefully this continues and makes a new higher high today. That's what I would like if I were me. And these horizontal lines and these patterns, these are all just from previous conversations. Okay. But you'll see the theme of it double bottoming on the 3rd week of August. So maybe some up today. I don't have a lot of belief in the pound. It's just a trade. CAD. How about this? We have maybe a new move higher off the moving averages. This is a 4 hour. Let me zoom in on the 1 hour. We'll take a look at this one. Okay. Up, 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 down, down. Okay. is kind of the idea. And I'm in here. I don't recall the exact moment of purchase, but nonetheless. So now the idea is it comes up and hits this area. So this is just from yesterday. So again, I don't know. I was probably in on a smaller time frame. I should be in down here. But I think this is a late day trade, so I'm in basically on today's pivot point. Today's pivot point, based on this entry here, the target was here. Okay, so that was yesterday or something, right? And so now, for me to feel comfortable, I would like it to head up. Okay, so you have the higher high, higher low, higher high, higher low, higher high, higher low, and I hope that continues all the way to December. Cool. Noise. So that's CAD. Aussie is a tricky one because we don't have very good news out of Australia. But once again, we had some minor news out of China that once again they're going to adjust interest rates and all that kind of stuff. So it's not very good support, but it's support by the government. At least they're thinking about maybe trying something serious. Anyways, so what's the price action? Up, 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 down, down, buy, up, 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 down, buy, up, up, down, down. Oh, baby, I want to get with you and take your picture. Right? So, anyways, yes, you see? Cool. So you got your higher high, higher low, roll reversal, boom. And Aussie's kind of like a dog with fleas, or even with a flea with dogs, right? But it's my China play. It's my seasonal play. Not really in love with it, but it's working. It's not Mr. Right, but it's Mr. Right now. So today's day trade was buy it here and target there. So once again, we've already I know it's 6:30 in the morning, but it's already done. We're already done Tuesday on like multiple. This is why we meet at Investor Boot Camp's day trading group. We meet at 4 o'clock in the afternoon to plan these trades so that you don't wake up at 6:30 in the morning and like, what are we doing today? Well, the professionals are taking profit. Okay. So, yeah, bummer, right? Well, now if you're just logging in and starting your day, you're actually planning Wednesday. You can do it at 8 o'clock in the morning or 4 in the afternoon, but today is done. Okay, cool. So I would do things like this if I were me. I want to look at these smaller levels. I just want to like leave little notes for myself, little mementos. Okay. These are in case we come down, but I want you to notice like this is out of the training course, right? Like this idea of, right? Like here's price action, right? You're up here, you look left, right? And you look at all these little things that used to be resistance. And so it came down. Oops, I wanted that in blue. There we go. It came down, hit this level, right? Then here, and then here, and then here, and then here, and here, and here. And we just keep recycling. Resistance becomes support. Resistance becomes support. Resistance becomes support. We call that price action. So, like mentally, you could do things like you can measure this distance, right? Or you can measure this distance. Which one's right? I don't know. It's just a measurement, right? They're both right. Um, but what you might be thinking if you're a trend trader is okay, the distance between the right, the 3A2 and 618, that's the most ideal, which is the same way as looking left and dragging across. But nonetheless, that's what Fibonacci is telling you is, you know, if there is a trend continuation, it's going to pull back and it's going to go up. And this is why I laugh at like, I don't care what tools you use. If you use price action, you would have looked here and said, somewhere around here, I want to buy. Is that right? Yeah. If it goes up, it's right. You don't know. All right. So you don't like price action. You like Fibonacci. What does that say? You measure that swing low, this swing high, somewhere between the 382 and 618. Is that right? Yeah. Well, it's the same gold damn thing. All right. Let's try it again. You don't like Fibonacci. You like pivot points. What does the pivot point say? Somewhere in here. Well, shoot, it's the same gold dang thing. This is why you don't need to learn 27 different ways to trade. Just pick one and master it. And the pips become your puppets. You're like, I don't like those, Wayne. I only like moving averages. Oh, cool. So you bought it off the moving averages, right? Boop, 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 boop. So, anyways, cool. Coolio. Did we do them all? I think we did them all. What do we do? Pound yen, Swiss yen. I don't think I'm on a Swiss yen anymore, am I? Oh, I am. All right. I'm on a sissy yen. Going nowhere fast, but doing its job. So let's go back in time. Okay. Bottom, up. Okay. What is this? Day trade slash swing trade because it's the first of the month, right? Back, down. This is a buy zone. Okay. And then tomorrow, right? Or something to that effect. Now, this is a little lower because I don't think we've made the higher high of the day yet. So really what we need to do is break this high and then tomorrow buy it at that price or something near that. Use a Fibonacci, use a daily pivot. Like we're still 12 hours away. So this is, too early for that. So it'll probably be there. If we make a higher high, then the higher low is probably going to be somewhere around there. Let's see if I missed anything. Gold or no, I think we got it. Cool. And this might follow up. JP had a question yesterday about like leverage and stuff like that. And we're talking about making, 1% or something on a trade or risking 1.5% on a trade. Well, yesterday I had 250 pips. I woke up this morning with 500 pips. Made 250 pips sleeping. Yeah, I should be a professional sleeper. Yeah. And so I don't want you to try that kind of return on one trade. Okay. I don't want you to make 1 or 2% on one trade. So probably by the end of the day, I'll have 2% on those trades, which means, I don't know. If that was my goal for the month of August, it was a good August. Augusts are not supposed to be great months. So I got at least my 2% goal, is as low risk as I could possibly trade. Sweet. But I might hold that and all these trades all the way through September. If I was able to hold them, like let's say we don't get a pullback, I'm ready psychologically for a pullback. But let's say every few years there isn't a pullback. It just takes off third week of August and just keeps rolling. Cool. So if I was able to hold these 5 or 6 trades for the entire month of September, I'll probably make another 2%. Probably more, right? Probably more. My goal is 2% a month. And for those that are laughing at, well, that's 30 something percent a year. That outperforms almost everything. But then when you look at a risk adjusted level, it's too good. So I tell myself, I can trade even with less leverage. I can trade smaller and still hit my financial goals. And that, I think, is the right attitude. Not bigger, but smaller. Cool. All right. So I guess we'll just leave it at that. We got news this week. It hasn't even begun. And if I'm lucky, the news comes out and supports my research. Need a little bit of luck for that, though, huh? Yeah. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. And if you're watching this on YouTube, I need your $8 because I want to buy a Lamborghini and I'm trying to get rich without working. So I need your $8. Well, actually, I spent a lot of money maintaining QuantBox. So chip in. Let's go. Get serious. Start acting and trading like a professional. Peace on earth. Cheers.